U.S. stock futures ticked lower Monday night after the Nasdaq Composite retreated from its record high. Futures tied to the Dow Jones Industrial Average dropped 48 points, or 0.1%. S&P 500 futures inched down 0.1%, while Nasdaq 100 futures fell roughly 0.2%. In after-hours action, shares of GitLab tumbled more than 20% after the software company posted a weak forecast for the full year. During Monday's main trading session, the S&P 500 dropped 0.12%, and the tech-forward Nasdaq Composite slipped 0.41%. This came on the back of the two indexes' record closing highs on Friday. The Dow also slipped nearly 98 points, or 0.25%. Chipmakers Nvidia and Supermicro Computer continued their run, gaining more than 3% and 18%, respectively. Meanwhile, other mega-cap tech names struggled and pulled the market lower. Apple lost 2.5% after the European Commission fined the company nearly $2 billion. Tesla, which fell more than 7% following new price discounts, led the broad market index's losses. Overall, large-cap tech companies are still the best way to play the artificial intelligence trend. Jason Draho, UBS Global Wealth Management Head of Asset Allocation Americas, told CNBC's Closing Bell Overtime on Monday. They're still the ones that have the scale to kind of benefit. Their valuations are extreme, but they're also growing incredibly fast. Draho said although there are fears of pent-up exuberance in the market similar to 1996, he thinks there's still more upside potential ahead. But this market is still more in the early to mid-90s, not late the 90s. We don't see that exuberance yet, and I think some of these large tech companies are still going to benefit from this AI sphere, which we think has a multi-year horizon, Draho added. On the earnings front, investors will be looking toward reports from retailer Target on Tuesday morning, followed by Nordstrom and Box after the bell. More economic data, including the S&P Global U.S. Services Purchasing Managers Index, Durable Goods Orders and ISM Services Index are scheduled for release Tuesday morning. The three major averages cooled off from the market rally Monday, but it was utilities' time to shine. The utilities sector was the outperformer among the 11 sectors of the S&P 500, up 1.64%. Though the likes of Dominion Energy and AES were the biggest winners, posting gains of about 4% each, a notable winner emerged in Constellation Energy. The stock gained 3.5% Monday, but has also shown considerable strength over the longer term. Constellation is up 50% in 2024, while the utilities sector is down nearly 1.7%. CEG, which has a 0.8% dividend yield, remains well-liked among analysts, with more than 6 out of 10 analysts rating it buy, per FactSet. However, the average analyst price target suggests a decline of more than 10% from here. Darla Mercado, Ethan Kraft. The VanEck Gold Miners ETF, GDX, popped 4.32% for its best performance in 2024. Climbing as gold futures leapt over $2,100.